Joining us now in studio to discuss the current global economic issues is Professor Joel Stern, Chief Executive of Stern Value Management and visiting professor at the University of Cape Town. Good to have you with us. I think Alec must have been pulling your leg a moment or two ago with the hat story, but let's get on to something slightly more serious.
The sun was shining, so
but it is shining in South Africa.
You forgot that we have winter when they have summer.
I come here for your winter. Let's get that straight.
Do you
have you been
Have
you been in New York in the summertime?
No.
My goodness, you don't want to be there. The weather is just like Durban in February, with no relief. No relief.
How long have you been coming to South Africa, Joel?
Actually, I joined the faculty at the University of Cape Town in 1978, and I've been coming ever since.
Don't say that too loud, because Googs might get a little 1978. That's just the other
that
day.
is quite a long time to
Well, 78 to 85, and then since our firm had many clients in Johannesburg at that time, it became really uneconomic to teach down there and have the business in Johannesburg. So I changed schools at that time. From 85 to 97, I was at Wits. Thanks to Andy Andrews, by the way. Andy was the one who asked me to come over, which I did. And then when my very good friend Colin Fira left Wits and went to Cape Town, he said, it's time for you to come back. Yeah.
Joel, ratings agencies, it's a big story in South Africa at the moment. We're not happy with Moody's. I don't think there's any South African who's happy with the way Moody's has been acting. What would guide their process into bringing in the downgrades that they have in the past few days?
Well, the same thing that happened when they did the same thing to the United States. Remember? During the financial crisis, we got whacked only by Moody's. Standard & Poor's and Fitch stood by. Do I think Moody's was wrong? I don't at all. We were on the verge of a global depression. We were saved from that by very sensible policies by our Reserve Bank, the Federal Reserve. So at that time, it looked really dire. And I think that the value of a downgrade is that it gets the senior management of the banks to take another look at themselves.
But how
it's very helpful.
How do you manage that? Because Alec also mentioned at the top of the show that given the WEF stats, the South Africa's banking fraternity is one of the it's highly regarded and well respected. So how do you match that with...
The banking system here is number 2 in the world behind Canada. We're not America. We didn't have a bailout. We didn't have to have all of these funny things happen here.
Well, not, by the way, just not America alone, please. As soon as that happened in America, we were getting criticized by the Europeans. I knew, because we had clients in France. And the people on the French television were after me with a pickaxe. And I looked at them and I said, you think it's a problem in America? It's coming here too. And in no time at all, they were in bigger trouble than we were.
So is there a problem in South Africa?
Well, I don't know. I think what you have to do is this. The bankers have to ask themselves about the quality of their loan portfolio. What they really need is a risk index that they use inside the bank. And if they had a risk index that was implemented by, say, the Reserve Bank, just as an example, then if all the banks had to do the same type of thing when reporting to the Reserve Bank on their credit quality, all they'd have to do is submit what their number was, and it could be audited by their audit firm. So they would come out and say, hey, we're a 1.86. We shouldn't be criticized, but there is no such thing in South Africa, and it is needed.
Yeah. But we do have write-offs. We had recently had Nedbank, who came out with I think in fact the bad debts had gone down a little from the previous period. So although we do have an economy under stress, it's not anything like the kind of pressure that would require a downgrade.
Alec, look at me. Do I look like a free enterpriser to you? Of course. I've been all my life. But when it comes to bank regulation, it's different if the Reserve Bank says, I want the following report. It's quite different when the bank is negotiating with their auditor, should we write that off or should we not write it off? You see, if you're an auditor of an organization, you have to balance your decision to ask for something that the bank does not want to do against the likelihood that maybe someday you will lose the audit. In other words, there's a conflict of interest there all the time.
So
the Reserve Bank does not have that, by the way.
Might Moody's have some kind of an inside track to the auditors in a case like this? Because they seem to be out on a limb.
They were out on a limb in the United States too, but when I took a look...
they had Lehman's at a AAA before Lehman's went bust. I mean, it's all very well coming to the party later.
And they learn from the example. So they say to themselves, listen, we're not going to let that happen to us again. They take a look at South Africa, they look at the bank and so forth, and say, oh, this does not look good to us, okay? What do? They might have moved too soon for your pleasure, okay? But what if it turns out that this was a blessing in disguise, that it got the bank managements and boards to say, if I were a member of the board of any bank in South Africa right now, I would be saying, listen, at the next board meeting, I want the equivalent of a risk index done on our portfolio. I won't settle for less. Incidentally, when I was a part of the Chase Manhattan Bank back in the 60s and 70s, I encouraged that inside the bank. I said, listen, we shouldn't be turning people down for loans. We should be learning how to price the risk so we get the right rate of interest for the risk we're taking. That's what they need. They need to see whether on a risk-adjusted basis they're still okay.
Joel, that's good insight. Thank you. Professor Joel Stern
Pleasure.
is Chief Executive of Stern Value Management.